Today, we are going to talk about a very important issue, ESG investments in the fuel cycle. As you know, this issue is very complex and multidimensional, and our speakers today will try to examine this issue from different perspectives. So I would like to ask our panelists to switch on their cameras, and also I would like to introduce our moderator for today's panel, Mr. Riaz Rizvi, who is ex-Kazatomprom Chief Commercial Officer. And now Riaz is involved in investments in metal and mining. As you know, Riaz has 25 years experience in investments in energy and uranium. So Riaz is no stranger to this ESG investment issue. Hello, Riaz, and welcome to our session today. Thank you for joining us.
Hi, Olga. Thank you very much for the introduction, and welcome everyone to session 3. I'm delighted to be moderating this panel on ESG investing in the nuclear fuel cycle. We have 4 great speakers with us today. We're very lucky to have them, and I hope over the next hour and a bit we'll be carrying out an in-depth analysis of some of the fundamental impacts that ESG is having in reshaping both the investment and also the corporate landscape. I just want to make a quick introduction to our 4 speakers. Arthur Hyde from Segra Capital is not only one of the most committed and vocal investors in the nuclear space, but all around a great ambassador in terms of promoting transparency and heightening awareness of the industry. Brandon Munro, CEO of Bannerman, who certainly walked the walk, with local communities, with charities, with governments on conservation issues, on ecology issues, on education and national legislation. Grant Isaac is absolutely one of the thought leaders of Cameco and of our industry. And Cameco, a company which you all know, is really synonymous with ESG. And finally, Jarret Adams, CEO of Full On Communications, who's really leveraging his background with Areva and NEI, and in the clean energy sector before that, to engage with public stakeholders on key issues facing our industry. As for the format for today, I'll spend a couple of minutes running through some basic slides just to set the context for our discussion, and then we'll hand over to the panel. And I hope this to be a really interactive session. Panelists have not prepared any presentations, so I really encourage all of you who are listening out there to ask as many questions as you can, which I'll then put to our panelists. So first slide, please. ESG has become the topic of discussion within the nuclear sector. Certainly every investor that I talk to is asking about ESG. Some attribute ESG as the reason for the spectacular rise that we've seen in uranium equities over the past 6 months. And I think here's the reason why. As you can see, the spectacular rise in assets under management incorporating ESG principles over the last few years. Just over the last couple of years, 2018 to 2020, we've seen assets under management that incorporate ESG principles rise from 12 trillion to $17 trillion, and that's just US assets. So essentially 1/3 of all US assets under management, professionally managed, are now focused on ESG. Within that US context, the top issue is climate change, representing around $4 trillion out of the 17 that we just talked about. If we go more globally, next slide, please. One more slide, please. If we look globally, it's exactly the same picture. It's exactly the same trajectory. So globally, we have about $45 trillion looking for ESG investments as of 2020. So it's a clear trend that's emerging as a strong driver in investment decisions and capital allocation. Next slide, please. So how do we get here? I would say pension funds were some of the earliest investors in the do good thematic. and we're really pioneers in investing in healthcare and social housing. In the 70s, we really started to see the picking up of principled or ethical investments, looking at boycotting certain companies and countries in a practice that reflected early forms of negative or exclusionary screening. And that's still a thematic that's very important today. Fossil fuels, for example, we're capturing a negative screening representing about 5% of investors in 2018, and that number went up to 19% in 2019. So investors moving asset classes out of their desired portfolio because of their negative connotations. So over the years, we've seen the evolution of ESG in a number of different forms. We've talked about triple bottom line, about the virtuous circle, about socially responsible investing, impact investing. These are all parts of that evolutionary process of moving away from Milton Friedman's profit-only doctrine. 2006, the United Nations Environmental Programme launched the Principles for Responsible Investing, which provided a key framework for investors to incorporate environmental, social, and governance factors into their investment process. Today, there are over 2,500 money managers who collectively oversee $80 trillion of assets that have subscribed to these principles. 2015 was a really important year for sustainable goals, with the adoption of COP21 Paris Climate Accord, where 196 countries agreed to stay below the 2-degree global temperature rise from pre-industrialized levels to the end of this decade. And also the 2030 Agenda for Sustainable Development, adopted by all UN member states, which launched the UN Sustainable Goals, which set out 17 sustainable development goals that you see on this slide. So this is really, I guess, the coalescing or the coming together of a lot of themes in one place, focusing on the principles that we'll be talking about today. And finally, 2021 to 2030 has been declared by the United Nations as the decade on ecosystem restoration, which aims to prevent, halt, and reverse the degradation of our ecosystems. Next slide, please. So what are the pillars of ESG? Well, there are three. The environmental pillar. Greenhouse gases are probably getting the majority of the attention today, but in terms of environmental concerns, energy efficiency, air, land, water pollution, particularly in relation to plastics, has been a very important theme. Water scarcity and biodiversity are some of the other factors that investors are really thinking about. The social pillar includes health and safety, quite a topic that we're all very familiar with, human rights, local community impact, employment, working conditions, and finally the governance pillar really tries to address the alignment of stakeholder interests, not just shareholder interests, including obviously voting and shareholder rights, executive compensation, and so on. I think ESG has been very high on people's agenda, certainly over the last very difficult year that we've had, and I'm looking forward to hearing our panelists talk about how ESG is really coming into the mainstream public discussion. So under ESG, a number, you've got three broad headings, but you've got a number of different criteria, which may or may not be relevant. So if we go to the next slide, a quick dive into MSCI's rating parameters helps to visualize the approach taken. Here we see specific ESG factors as well as their weightings that are given for the utility sector. It's just one example. So we can see that issues such as carbon emissions, renewable energy, toxic emissions, human capital, health and safety, and governance are very important in constructing the ranking of utilities from a number of ESG parameters, and equally consumer finance protection, accounting, electronic waste are just not that important for the utility sector. So the findings, certainly a lot of room for improvement. Only 18% of the 425 utility companies that were assessed ended up aligning with the UN's Clean and Affordable Energy Sustainable Development Goal. In the energy sector, in 2020, fossil fuels were a key source of revenue for over 90% of the energy companies in the list. I mean, to me, that sounds like a great opportunity for our sector. Next slide. And this is my final slide, basically to say that in many ways, the ecosystem around ESG and ESG monitoring is still in its infancy. It includes organizations focused on these 4 areas that are highlighted on this slide. So all the way from publishing guidance, such as the UNPRI, right through to creating assessments and ratings, such as Sustainalytics, RepRisk, and MSCI that I mentioned earlier. And the sources that they use are equally diverse. There's obviously company filings, and Credit Suisse found that more than 85% of S&P 500 firms are now disclosing ESG information, and that's up from 20% back in 2013. NGO reports and government agencies, also critically important sources of information, as well as some more abstract sources such as media and alternative data. And the basic question that's being asked by these rating agencies is, what ESG issues could harm the investors, and what ESG issues create opportunities relative to companies' peers? And with that, I'm going to hand over to our panelists. Really, maybe just to start off with a very simple question: how long is your company, and how long have you been involved with this question of ESG?
I'll kick it off. So I would say for most investors, a lot of the considerations that are driving ESG integration have been a part of an investment process for a long time, right? It's very hard to think of a large investor not considering governance issues when investing in whether they're a private equity fund or a hedge fund. That's always been a core of, I think, how most investors look at an investment opportunity. I think what's happening now is 2 things. One, those processes are being formalized. So it's going from we consider this within our framework to we actually have a process in which we diagnose how a company fits within a rubric, right? It's a much more formalized process. And then separately, I think that the non-financial considerations of an investment have risen to the point where they now are viewed on a peer-to-peer level with the financial considerations. This will differ by institution, and I'm sure we'll dive through it more later. But I would say Segra, and I think most investors, have been doing some form of this since they started investing. It's really the last 2 years where the process has been formalized.
Hey, I think I might be next up. So at a personal level, I think particularly with the E and the G side of things, it's been 20 years or so. In terms of environmental exposure in the mining industry, I had the wonderful experience of working closely with the Macraes gold mine in New Zealand. And that was at a time when I worked for a company that owned that mine, and then subsequently I was very involved in the float of that, which is now a well-known gold company, Oceana Gold. Now, New Zealand then, and probably still now, had the tightest and strongest and most virulent environmental regulations anywhere in the world. And as a first operational exposure to mining and gold mining, I ended up just thinking that's how it should be and how it ought to be and how it is. And it was only as I started to work a little bit more in the industry that I realized that there's quite a spectrum, and what we were doing was towards the end of that. In terms of working with Bannerman Resources, who I work with now and who I lead now, my initial involvement was back in 2009 when I had the job of undertaking all of the environmental impact assessments and environmental and social management plans for our Atango project in Namibia. So I was sent over there in 2009 and moved there with the family, and had just a wonderful experience interacting with all of the consultants and very, very passionate environmental consultants and environmentalists in many cases. And it's a sort of country where the environment and people's leisure and people's work is just so intertwined that, in fact, most of the mining industry there are conservationists, and they're the biggest domestic funder of a whole range of conservation activities. So quite a different situation to what we find in Australia, where there's still quite a dichotomy between the mining people who are deemed by the environmentalists to be a threat and vice versa. And in terms of governance, that goes back a little bit further, because by trade I'm a corporate lawyer. So governance advice to boards of publicly listed companies was, together with M&A and equity capital markets, my bread and butter when I was in private practice before working with the Macraes gold mine. So social, we can come back to that, but there's been a sprinkling of that over the last 10 years as well.
Great, thanks, Brendan. Jarret, do you want to go next?
Yeah, thanks, Riz. Yeah, so I think the topic of ESG has really gotten a lot more focus in the past few years. I think I've been fortunate to work in a lot of different aspects of nuclear energy over the past, say, 20 years in my career, including uranium mining, fuel fabrication, and the reactor part of the business. And when you look at the environmental attributes of nuclear energy, as well as the social and governance things, and you look at what those criteria are that these investments are being judged on, you say, hey, wait a second, this is what we in the nuclear sector have been doing all along. Like, it's kind of like you're raising your hand and saying, hey, this is what you're talking about, and you feel like you're sort of like, behind a plate of glass saying, hey, hey, you can't hear us, you can't hear us. So that's really something that struck me being in nuclear and watching the rise of ESG investments over the past few years. And I think really why I'm so excited to take on this topic this morning.
Thanks, Jarret. And that's definitely something we have to come back to, the question of why we're behind that glass plate. So finally, Grant, how about, companies have been involved in ESG for forever, I guess, but tell us a bit more.
Yeah, thanks for pointing that out, Riaz. And let me just begin by saying thank you to you. I think many of us were worried that when you stepped away from Kazatomprom, you'd be stepping away from the industry, and we're glad you didn't, and delighted that you're still participating in these types of events, and look forward to seeing more of you, because you certainly have had an indelible mark on our industry. So thanks for doing this, really appreciate it. As soon as you join Cameco, the minute you step in the door, you realize that actually many of the features that we now call ESG, and in the past called corporate social responsibility, and before that called sustainable development, it's part of the fabric of this company, not because we have to do it, because it's the right thing to do. And so it's long been just part of the way Cameco operates. What's different is we now write an SG report, not through a skeptical lens. And what I mean is not from a nefarious point of view, but when we put together our reports on what we did and what we now call ESG, we always had to read it from the perspective of, there's going to be investors who are going to look at this and they're going to say, why are you doing all this stuff? You don't have to do all this stuff. Some of it looks really expensive, you guys. We don't have to do that anymore, because what's different, it's those same investors that tend to be driving this. Now, our observation is right now they're driving it down a much narrower lane than the broader, say, CSR perspective that we saw in the past. I would say that the real focus is on E, and even within E, as you pointed out, Riaz, the real focus is on the decarbonization part of E, as opposed to land management and biodiversity and water management. Those are still there, but it really is the decarbonization part of E that is a strong focus right now. A great opportunity for our sector, but certainly one where we see the challenge to the industry being one of inclusion, like you said, making sure that as an industry and as participants in the industry, we're not being left out. We're dealing with the systemic biases that tend to run against our industry, And the second is improvement. I mean, getting included is one thing, but having meaningful improvement plans so that year on year you can show that not only do you belong in that group, but you're actually improving at a rate that's acceptable. Those are the two key challenges. So for us, it's part of what we do. We hope that it broadens out a little bit more than just kind of this decarbonization focus at the moment, because we like our performance across the other elements of it. But it is certainly a good start, and let's all deal with the industry challenge of being included properly, as we should be.
Brilliant. No, you raise a very pertinent point, which I want to come back to in a little bit, which is, what is the cost of ESG and does it make financial sense? But before we go there, just a broad question: why do you think the whole world is suddenly talking about ESG? What's driving all that capital towards ESG-centric thematics? I mean, who's driving the agenda? And I guess there are certainly a number of actors. Maybe each panelist could take a different actor, but there's governments, there's NGOs, there's investors, there's rating agencies, there's a grassroots movement, right? There's Greta. So let's maybe start with Brandon. If you can pick one of those, or just tell us which one you think is really kind of pushing this agenda to the forefront.
Well, I think it's coming from investors, and particularly investors who invest on behalf of other investors. So we're really seeing the movement from anticipating a huge volume of money that's coming into what are millennials and even younger people, as they start to have their own investment funds, but I think more relevantly, as they start to look slightly over the horizon and see enormous quantities of money that they will inherit and they will manage themselves. So there's a tier of fund managers and fund of fund occupiers who are really seeing that as the opportunity to harness that volume of money. And just in the time that I've been an investor since I was their age, both the capacity to direct how people want their money invested has increased enormously, but so too has the willingness and the appetite for making those sort of decisions and choices. When I started out, maybe you would make decisions like, well, I don't want tobacco in my portfolio, or I don't want gaming or arms in my portfolio, but it was a very, very, very narrow exclusion list. Now it's an absolute buffet of choices as to who you do or don't want to invest. And there's countless examples in the market where that's worked both ways in terms of funneling a huge amount of funding and investable capital into either good perceived companies or bad perceived companies.
And Jarret, you're nodding. Is that your assessment as well, or is there another group that you think we need to be paying attention to?
Well, yeah, I think that's exactly it. I was just nodding because, yeah, I mean, exactly what Brandon was saying is that when investors are looking at their choices, they're saying, well, I just don't want to make money just to make money. I want my money to be a force for good. And especially too, like younger generations, millennials, and the next generations after that, they care about what their actions and their investments are doing. So given the choice between an investment that has an ESG focus and one that doesn't, they would choose the ESG one every time. I mean, there is that choice. And so given that choice, that's where the driving is going to be. And on top of that, the media and the business media is going to be focusing on that trend as well, because it's new, because it matters to the readers and to the community. It's where the focus is going to be.
Maybe I'll just hop in. Sorry.
Yeah, no, go ahead. I was gonna ask Grant if he had a different view.
Well, I don't have a different view, maybe a slightly different observation though, and there are a number of actors, if you will. I mean, you see the investment community driving it. They're driving it, I think, in the form of these net zero carbon targets, which in the past, these kind of bold targets have always been the purview of governments to make. And it's the fact that the private sector is starting to make these commitments that's a real game changer, because the accountability, the electron accountability, is going to be way stronger when they have to report back to their stakeholders. Governments come and go, and it's easy to walk away from the multi-year commitments much easier than it is for the corporations and the private sector to do. So I think that's important, but I think we're also dealing with a bit of a situation we've seen before in other areas where standards need to be set. And there is a circularity, if you will, that happens where the standard setters are a bit hesitant because they want to find out what the stakeholders want included. And the stakeholders are a bit hesitant because they want to find out how the standards are going to be set. And so we're seeing this kind of dance. And I think that's what you're highlighting with your question, where you've got standard setters circling around the investment community wondering what's going to be included and excluded. The opportunity for our industry is wonderful to affirmatively and unapologetically say, we belong there. Stake that claim, put that flag in the ground, and just kind of walk through this circularity, because there are a lot of people circling. There are a lot of people trying to tell you what should be in, what should be out. And why wait? I don't think there's a benefit to waiting. The industry could probably be a lot more proactive, and I know we'll get into what that might look like. But certainly that circularity is a challenge right now, but one that can be dealt with.
Perfect. Art?
Yeah, I guess I was just going to say from the investor side, I don't know that there's a one-size-fits-all ESG integration approach. I think there's a lot of different perspectives. And I really want to emphasize today that, I think you said in the opening remarks, but I agree, this industry, this ESG analysis concept is still in its infancy. There's a diverse set of frameworks and perspectives. If you're a private equity fund and you're taking a position for 7 to 10 years, the concept of integrating governance makes a lot of sense, right? It's probably always been a part of what you do. If you're a high frequency trader and you hold the stock for 3 seconds, maybe how do you fit ESG, if at all, into your process? Where is your capital coming from? Is it a single family office with a big environmental focus? Or are you investing on behalf of pension holders or a sovereign wealth fund where you actually have a very diverse set of stakeholders that could all have different political views, cultural biases in terms of how they think about investing, right? It's a much more complex topic depending on what pool of capital you're talking about and what your goals are. And I think that's why you see investors deploy ESG in such different ways. We've mentioned some of them today. There's divestment, there's negative screening, but there's also just using ESG integration as a risk management tool, making sure that when I wake up at night, if I see a New York Times article about a company I'm invested in, I understand where the material articles are likely to fall and I diligence those topics. And so, again, I don't want to frame the topic of ESG as totally up in the air. I think you will see consolidation and standardization, and that's why it's so important that the industry be proactive on it. But I'd say that the unifying force across all investors is that you want additional disclosure. I think ESG is really about disclosure and data. If you're an investor, no matter what you're doing, you want data to be available and comparable. And I think that's where entities like ESG rating agencies have come in. They've kind of stepped in between policymakers and investors and corporates to say, we're gonna either scrape publicly available data or have dialogues with companies, and we're gonna give our assessment of how these companies are doing. For most investors, that hasn't replaced internal ESG frameworks, but they do look to these rating agencies and get their perspective on things like technologies. And so I'd echo what Grant said. None of this happens in a vacuum. Government policy impacts investor sentiment, impacts rating agency forecasts. These all come together. But from an industry perspective, what nuclear should try to do is focus not just on governments and policymakers, where I think we've spent a lot of time as an industry in the past, but also on private capital. Also reaching out to ESG rating agencies and understanding how they view the sector and why. I think being proactive on that front will pay dividends as all of these disparate views of ESG start to consolidate.
Brilliant. And there have been a couple of questions about that topic already, but just before we go there, Brandon Jarret mentioned young investors, millennials who are inheriting a lot of money or making a lot of money and wanting to invest not just for the return. There's a bigger why than just the return. But is it fair to characterize ESG investing as being something still which has a cost to it, Art? Is it less attractive financially to be focusing on ESG investing as opposed to, let's say, ignoring ESG parameters?
I actually think this is up for debate. I don't know that there's an answer yet. If you think about the concept of ESG, right, it is you're going to move capital from industries and sectors and companies that are not playing by the rules of the road towards companies that are. And so over time, you think about corporate finance, that should lower the cost of capital for industries that are pro ESG and raise it for industries that are not. From an investor perspective, because that cost of capital is your return, you should actually over time guarantee a lower return by investing in industries that are pro ESG, because you've constrained capital into those sectors. So traditional ways of thinking would say that actually you likely do have a lower return, and that's compensated by much lower risk and much better corporate governance. The flip side of that is to say that actually a lot of these dynamics create more successful companies. And so when you think about diversity at the board level, when you think about treating the environment in an appropriate manner as a company, and if society starts to honor those things and actually value them, right, corporate carbon tax, whatever, then actually those industries will succeed. And so over time, they should edge out and outperform industries that have not made those changes. And so I think there's still two sides to it, and this is a hotly debated topic. What I know is in the foreseeable future, as finance moves towards this framework, flows are on your side. And so I think it's very hard to make the argument that in the next 5 to 10 years, not implementing ESG is a good financial decision. Over time, in a model, we'll see. But I think for now, it's a no-brainer to be part of this movement.
Yes, if I could come in there.
Yeah,
look, I agree with everything that Art just said, but I think if I can provide an overlay from a developer perspective, and when I first put a corporate social responsibility, as it was then known, plan to the Bannerman board back in 2009, I made the point that if we spend the money wisely, we should get a very handsome return on investment of everything that we spent in both an environmental sense and in a social sense. And I really believe that that's true, particularly for developers operating in our industry, which is very sensitive. We've been under the bright light of scrutiny for many years. And you can't really put a price on the cost of project delays, on the cost of losing some of your social license, on the cost of losing confidence from not only your local stakeholders, but your local government. All of those things are such a serious risk in our sector to both time, but also to legal license to operate, that every uranium company, whether it's an explorer or a developer, should be investing a sizable amount of their budget in those areas. And it takes some time to transition geologists who might be used to just spending money on drilling, and perhaps they've come from other sectors and they haven't had their nose broken with the sensitivity and scrutiny of our industry. But we've certainly found that our investment, which has been generous, but has paid off enormously. And over time, it then starts to transition into strategic value in a company. And that's sometimes an amorphous concept that's misused and overused. But if you look at whether it's being given a sense of responsibility by a host government, or whether it's joint venturing, or whether it's delivering product to a utility in the future, all of those things become a lot easier if a company has a very, very strong sense of shared social license with its host community in the broadest sense. So I think when it's done properly and when it's done authentically, it's a very, very good investment. And now the challenge is to make sure that investors understand that, and also to weed out any of the greenwashing that we're starting to see, maybe not in our sector, but certainly across the mineral sector more generally.
Okay, and so Art is basically talking about a risk-adjusted return that that captures a lot of risks and essentially means that it's a more attractive investment proposition. Brandon's talking about I guess in many respects the defensive nature of getting it right. so you don't lose your license, so that you don't have environmental catastrophes along the lines that we've seen, Vale or Rio, all the big boys who should be getting it right, and big girls, I shouldn't be. I should be talking the talk as well as walking the walk. But Grant, is there more to it than that? Is there a competitive aspect of differentiating your company from other companies in your sector that's also kind of embedded in this this strive for ESG?
Yeah, it's a great question, and I would say that so far there really hasn't been a competitive advantage on the industry side. So, for example, I talked about the programs we've had in place for decades, and for many of our customers, they retain audit rights to come and look at our environmental performance and our social performance and our governance performance, and many of them will write up really good stories about the stewardship of uranium, and then buy very little from us and buy a lot more from others who aren't doing those things. So it is a global market, and we can't control that, and that's a reality. It's the challenge for the industry. When I said number one priority is to be included, and the number two priority is to actually show improvement, the hope for us, obviously, is as the industry starts to improve, one of those aspects is a meaningful commitment to ESG and procurement. So if you think about that performance across the fuel component, the generation, and the back end, as we see these criteria start to matter, then we do expect to see better scoring in evaluations for RFPs, for example. Right now, the ESG component of it is pretty small, and the pricing component of it is pretty high. And we're competing with a lot of jurisdictions for where these aren't priorities for them. Either they don't have the need for capital because they're funded differently, perhaps funded from the state, or it's just it hasn't been a priority at the national level for that jurisdiction. So I would say it's not a level playing field, and there are a number of challenges that still remain. But hey, we're hopeful. We've been doing it for decades. We know that there's value to it in our operations. We do have a fundamental belief there'll be value to it over time as these become more meaningful parts of procurement and evaluation exercises. But at the moment, we're doing it under the same view as those investors who were saying, look, my challenge is to decide what's going to be around if I'm managing pension funds or I'm managing a sovereign wealth fund. Those assets, I need them years from now when those liabilities are due. So I'm asking the question today, based on the social trends, based on the patterns, what's going to be around? And so, that's the same faith we're having, that we will be around and these things will be valued more. But right now it is tough, Riaz, because it's hard to point to where the bottom line advantage is.
Interesting. And so, I can talk from exactly the same place where our customers, when I was at Kazatomprom, were very focused, some of them, on doing environmental audits, on doing ESG audits. And what you're highlighting is that that's something that as an industry, we've had to contend with, and we've been very proactive in managing. Jarret, how would you rate our industry when it comes to the ESG efforts? Give us a broader perspective of, compared to best in class, how does the nuclear fuel cycle compare?
I think going back to what I said before is that the industry, the nuclear sector broadly does an excellent job of performing on those criteria that ESG represents. We have a fantastic environmental record. We have a good societal record, good governance record. We're highly regulated. We conform to some of the strictest regulatory requirements in every country where we operate. But I think where we fall down is in our ability to get that story across to the investment community, across to the broader public. So a lot of people in this sector, they say, well, we're doing what we do right, and we can just leave it there. But the problem is that, it's like the old tree falling in the forest. If nobody hears it, then who knows if it really happened. So I think that's where we can do better, because there's a lot of industries out there talking a good talk about what they do, and their performance isn't nearly what ours is, which I think really sort of creates that opportunity for nuclear and uranium and the entire sector to have tremendous upside potential.
Okay, I think this is one of the key questions for today. So I'd love to hear all the panelists' view on this. If we're getting it so right, how is it that that's not translating into the way that the industry is seen or perceived, or is it? So, Arthur, maybe as an investor looking into the industry, what's your thought? What do we need to be doing better?
Well, you know, I'm kind of in a tough position to say what the whole industry at large should be doing better, but I'll make a few comments. You know, a lot of the time when we talk about ESG concerns for nuclear and the fuel cycle, you would think that we'd spend most of our time talking about nuclear waste or non-proliferation, the classic topics that Grant and Camco address so well in their discussion points. I think a lot of the time for us, investors are asking, why should we spend the time? You know, there's a perception that investing in the nuclear sector carries some risk, and that's because anybody that discusses nuclear brings their own personal biases into the topic, right? I think what we like about it is that the more you tend to know about the industry, the more experience you have with it, the more pro-nuclear you tend to be, right? We all talk about that education curve where if you've done the work, you actually really like the technology. But I think a lot of what we are spending our time on is trying to argue why nuclear needs to be part of the solution. Why, if you're looking at a decarbonized world in 2035 or 2050 or 2060, whatever your target is, it's so much harder to do without nuclear. So if investors aren't spending the time and committing to the industry, they're making a big mistake. I don't know if many people in the audience read Bill Gates' recent book, but he kind of says there's two people that scare him. It's the people that totally deny climate change and don't think it's an issue, and it's the people that believe in it and believe we have all the tools there are to solve it. And I think that there's a lot of investors that have never dealt with utility scale problems. They don't realize the size of this industry. And so it's educating them on why nuclear is necessary, how big an impact nuclear already has on the US electricity grid, for example. You would think that investors are educated on that topic, but they're not. And so a lot of what we spend our time doing is getting people excited about spending the time. Because as Jarret said, once you spend the time and you realize the ESG story that this industry has to tell, you tend to actually get really excited about it. So it's about getting eyeballs over making the argument. The argument actually comes pretty easily once you get somebody in the room.
Interesting. Brandon, do you agree with Art's view? Is it a case of the argument sells itself as long as people are willing to put the effort in to get educated, or are there some issues that we need to address?
Well, I certainly agree that just about everyone who comes to the question with an open mind and is prepared to work through it leaves that question with a positive view. And I've just had that experience so many times I can't even tell you, both at a personal level, at a government level, at a commercial level. But I don't think that's enough to rely on to see the change and the shift that we really need here. And the comment that I'd like to make is that we've come out of the shadow of interest groups and NGOs and the anti-nuclear brigade. That shadow, we're actually standing in the sunshine at the moment because of the incredible contribution that nuclear power can make to the greatest single cohesive challenge that the world faces. The problem is, my perception is that most of our industry still thinks they're in the shadow and still sees themselves being in the clouds, in the shade of the clouds. So if I give you some examples, and I can offer one from our company. So in Namibia, we've done some incredible work socially, like really tremendous, amazing, inspiring stuff. And even to the point where I've been asked to speak internationally on case studies that we've led and that we've achieved. But we made a strategic decision a few years ago that it actually wasn't worth it to stand up and shout from the rooftops about those programs, because as it was, we didn't have the attention of any of the anti-nuclear and the NGOs, and it wasn't worth popping our head above the trenches to be shot at by them. We weren't a big enough company to be able to deal with that, and we just didn't want that attention and that distraction. Now that's a small company as we were then and we are today, but I think there's an element of that that pervades the whole industry. And I do think that there's a lot more that we need to do in terms of, you know, standing up and being really seriously proud of what we do for the world and our incredible attributes. And that's right from uranium miners throughout the fuel cycle, and of course at a utility level. Many, many reasons why we still come to this argument with our hands tied behind our backs, in many cases both hands. You know, some of it is that the parties that should be our very greatest advocates, the utilities, have multiple different energy sources. And so many utilities who should be saying how great nuclear is at displacing coal have still got fossil fuel sources of energy. So that makes it more difficult. And some of our industry groups have a similar dynamic. So I do think there's an incredibly good story to be told. It's just that as an industry, we're so technically driven and we're so precise in our thinking that the art of communicating, it comes a very distant second to the science of doing what we do so well.
Okay, and that's a perfect segue, and we've had a couple of questions by our audience asking, you know, if uranium is starting to be seen as ESG, what's the perception of nuclear, and how do we get a ESG lens onto nuclear to see it, you know, in the same light as renewables and quite the opposite of fossil fuels. So, Jarret, let's get the perspective of an expert in terms of how to communicate this message and what the focus should be.
Yeah, so I think one of the core parts of this is that our sector needs to view itself as a clean energy source. So it starts with us and informing our own people and making sure that the people that work in the industry, the people who work in the companies who are part of the organizations who are supporters of nuclear understand and have the tools to make the arguments in their favor. So that's the beginning part. Is first it starts at home with ourselves, and there are plenty of people who still don't really know or care that nuclear is a critical tool in the fight against climate change. So we start with ourselves, and then from there, then you have to say, okay, well, just having ourselves and our tools is not enough. We need third-party advocates, we need external supporters, and then we actually need to invest some money and resources into getting the story out. So it can't just be that we have a couple of volunteers on a Saturday afternoon standing out in the park cheering on for nuclear. This is a professional, long-term strategic investment, and it is core to what we do. And if we don't focus on it as such, then we're going to find ourselves in the same Groundhog Day, wondering why nobody supports nuclear.
Grant, you know, your company has really a stellar reputation in the market, so you're obviously doing something right. In terms of this question, you know, I started off by asking who's driving the boat, and the answer from all of you was it's the investors. Okay, but now it seems like the landscape is either shifting a little bit in terms of how we're thinking about this paradigm, or that the investors themselves need to be influenced by other groups, that they don't live in a vacuum. And Art said it as well, there's a circularity, and so, you know, your perspective would be really invaluable in terms of, is it the public, is it the NGOs, is it the governments? You know, how did you get it right, and how should the industry tackle the problem?
We're quite positive on this question, Riaz, because we actually think some really neat things are happening. Number one is, as industry, as private industry is recognizing they have an electron accountability, and they can no longer put up their hands and say, well, you know, I set up my plant here and I plugged it into the grid and I didn't make the decision what produced the electrons, and that's not good enough anymore. So those questions are being pushed by big industry now back on government, because it's no longer just a government question. You don't have the capture of small, very vocal groups with the government policymakers the way you had before in the past. And so that's certainly a good development for us, and we're very positive on that. And then, you know, so we then say, okay, if and our experience is as investors are coming more to the nuclear story, they're starting to crack through some of those biases. And they're saying, okay, well, tell me a little bit more about it. And then our experience is we're confronted with 4 big topics, because, you know, even if we can convince an analyst or a portfolio manager to take a good hard look at the sector and the fuel cycle, invariably they come back and say, yeah, you know, I ran it by our investment committee and they have the following questions. And we can almost predict it. Okay, the economics of it. We're told that the economics of nuclear is terrible. And so for us to have, as an industry, relative risk, relative reward messages on the economics relative to other power sources. We haven't been good at that, telling the story of the economics of nuclear. And then we get through that one and they say, okay, but then somebody asked about waste, and we don't have a good response. We don't have relative risk messages for waste. And then someone will ask about proliferation, and then someone will ask about accidents. And as an industry, we're not prepared with these, you know, market ready messages that Jarret's talking about. Other industries are fabulous at this. We're not. And we go into these big, long scientific explanations, and we forget that nuclear is like other industries, like biotechnology, for example, where the gap between those who understand the technology and those who are asking to consume it is massive. It's actually almost insurmountable. It doesn't get filled with information. It gets filled with trust. And trust gets built through reliable, consistent messages. And we're losing the trust sound bites. You know, it's pretty hard to stand up to you know, somebody in a boiler suit with a biohazard symbol talking about how bad the industry is. And then our explanation is a 25-minute explanation about radiation, for example. That doesn't work. We're going to lose that battle every single time. So where we see the opportunity is investors are cracking through the biases, and they're asking us to help make the case for them within their own firms, within their own mandates. And then as we turn to the industry to say, okay, what's the right message? It's like, I guess we're going to have to create it, because they don't exist. We don't talk with the same commitment and conviction that you see in other industries like solar and wind, for example. So we know what the challenge is, and we know what the solution is. And as an industry, we just have to put it in place.
And can I just tag on to that? I think that was really well said, Grant. And just to piggyback, I think if utilities are asking why uranium is starting to be seen as ESG friendly and utility nuclear power generation isn't, the beginning of every Camco earnings call talks for 15 minutes about ESG and nuclear. If I go to the same earnings call from large utilities that have big nuclear fleets, they might talk about being low carbon. They might talk about, you know, their phenomenal job record and their hiring practices. But nuclear tends to be a footnote. And I don't think it's rocket science. You know, somebody in IR figured out that talking about being low carbon is more popular with generalist investors than talking about being nuclear. But I think it's a real failing of the industry not to see that there's a cost there. And so, you know, if I pull up a corporate presentation for a large generating company and they're showing a state where the vast majority of clean energy is their nuclear plants, but nuclear isn't leading their ESG message as a corporation, that's a real failing. And that's something we have to do better. And I know I said I was going to have trouble critiquing the industry, but, you know, in addition to that, you know, I think energy markets are very tribal. Everybody has a very strong opinion. I think the nuclear sector is even more so. There's a progressive group, there's a conservative group, there's an advanced nuclear group, there's a large scale reactor group. And even though in theory we're all the same sector, we don't have a very unified voice a lot of the time. I mean, it might be at the WNA event we do, But you get somebody on a podcast and they're an advanced nuclear company, and they spend half the podcast talking about why they're improving on nuclear, why they're improving on safety or cost. I think there's a good argument to be made that nuclear as a whole is very competitive in those points. So to the extent that you're pitching your project at the expense of the industry at large, I think it's a losing battle. And I'd also say that so I used to work at JP Morgan. I was in the credit committee focused on public utilities. I remember sitting in meetings talking about Vogtle when I was in my 20s, and there was always somebody in the room that had an issue with just the concept of nuclear. And the industry can't pitch itself Big Tent and get investors to underwrite nuclear writ large. I don't think they're going to underwrite a specific advanced reactor design or a specific company. You know, I think we need to do a better job talking about the power of the industry, big picture. And then if you can get an investor in a credit committee over that line, by all means, talk about why you're unique. But I think we're missing that unified voice.
You raised the question of finance, which I think is a critical question. It's interesting when the EU started looking at the taxonomy question as part of their sustainable finance package, which is really, I suppose, one of the most ambitious and significant developments in terms of thinking about where the capital comes from for green initiatives. The initial concern was that yes, nuclear does address the clean air and the CO2 question, but there were questions about whether the industry as a whole had an adverse environmental impact. So just in the last week, we've seen the JRC report come out, or extracts of it being reported, where they clearly say that their analysis does not reveal any science-based evidence that nuclear energy does more harm to human health or to the environment than any other electricity production technology. And now we see the environmentalists' objection shift to, yeah, but it's not economic. So, I mean, it's very positive in the sense that I think the industry is winning the battle, but the question of economics does come up. So, who wants to tackle that question first?
Can I make just one clarifying point I know I've spoken a lot, sorry. I would say that when we think about ESG and we think about sustainability, it's not a black and white discussion. You know, being included as a potential sustainable technology doesn't mean that investors automatically fund these projects. It's still, the onus is still on the corporations and the individuals carrying out these projects to have an ESG framework that gets investors through the door. The economics still have to make sense. I don't know that the industry is asking to be, you know, green lighted as a whole. I think they're asking to be viewed on a level playing field and be considered and make sure that any comparison point is scientifically based and technology neutral. And so I just want to make the point that economics matter, but that will always matter. You will always have to finance a project. I think what the industry has asked for within the EU taxonomy is just some apples to apples comparison to its competition.
Because Grant uses the term electron accountability, which I love, and I think it's a great way to put nuclear power, if it can be incorporated into the framework of sustainable procurement, particularly by industries that use a lot of electricity. If it's just a no-brainer that nuclear is green just as wind and solar are green, fundamentally that seems like it would change the direction of how the nuclear industry gets financing going forward. Brandon, maybe I can turn to you. In terms of this question of financing nuclear, is it a level playing field? And what is it that the industry needs to be talking about or doing? Is it addressing the question of whether energy from nuclear is as affordable or more affordable than, or is it a question of who are we competing against or who we are comparing ourselves to?
I think what we've got here is we've got a very significant gap, but there lies the opportunity. So no, I don't think it's a level playing field in the minds of most of the constituents of policymakers at the moment. Essentially, we're competing now against intermittent renewables. I think we can say that we no longer compete against hydropower because in so many instances, hydro has been demonstrated to have such a large environmental and sometimes a bilateral cost that I don't feel like that's our competition. It's really intermittent renewables. And the reason why we don't have a level playing field there is the renewables lobby is extremely effective. They're very strong, and they don't have that big gap that Grant was talking about in terms of sun shines, panel works, flip the switch, what else do I need to understand? And so the renewables industry has been very effective at limiting people's perception of cost to simply the cost of producing the renewable energy when it's produced on the assumption that it's all needed and it's all accepted by the grid, without looking at levelized costs and certainly without looking at system costs. And as we know, but as we need to get better at explaining, once a intermittent renewable penetrates most grids by about 25 to 30%, it starts having enormous external costs. And those external costs vary from the power lines that need to be run from the coal-fired station that's being turned off all the way to where the wind is and all the way to where the large-scale solar fields are, to costs like the cost that society bears for having on standby gas facilities that are only used to stabilize a grid a few times a year, through to actually having the incumbent energy sources operating very inefficiently. So our opportunity is to get better as an industry, but particularly to empower policymakers and technocrats to really understand those system costs. And where I think we've been helped a lot in the last couple of years is with all of the electronic accounting that's being required at a state level because of binding carbon commitments. So a couple of years ago, really all a government needed to do to be on the right side of their constituents, and particularly say Green Party, who are parts of coalitions and so on, was just to increase renewables. It was a really simple metric, just increase renewables. The renewable lobby will do what they need to keep on side with the constituents. And whilst, oh gee, it might create a few problems down the track when we start to get higher penetration, well, that's not really what we're here for. We're just here to increase renewables. Now what's happened with carbon accounting and electron accounting is these policymakers need to consider the implications. And as that starts to become better and better known and more understood, that's where nuclear's just got such an incredible advantage, and where it can compete very effectively with just about any form of energy, because it doesn't need the storage, it doesn't need the extra transmission costs. It is a fully utilized capacity, and it has all of the tremendous social advantages in terms of well-paid jobs. I mean, the list goes on, and we as an industry hopefully understand those quite well. We need policymakers to realize that with renewable energy, nuclear offers a far superior solution. And then the final point, the average man and woman in the street assumes that storage will simply decrease in cost in the same way that a chip does in your computer, or the same way that an SD card does. So 10 years ago, a tiny SD card cost 10 times what an enormous capacity SD card does today. And honestly, most people think that that will happen with storage. But you ask any person who's involved in the mining industry who knows where the raw materials have to come from to meet this enormous storage demand, it will be the total and exact opposite, even with some tremendous anticipation of developments in science. So that's where nuclear will have a huge advantage, because we won't need to back in escalating storage costs into our offering.
Riaz, you're very successfully straddling like two of the major challenges we face. Number one is you're uncovering the challenges at the standard setting level of our industry and the challenges we're facing. And Art's gone through some of them. Lack of consistency in the standards. Well, that's a challenge. Lack of principles for things like what's in scope and what's out of scope. I mean, as a mining company, we're an energy taker and we're held accountable for the fact that the provincial grid here in Saskatchewan is mostly powered by coal, yet we're not allowed to take credit for the carbon that we avoid when 100% of our products go towards carbon-free power. So that's a problem in the standards. We have to fix the consistency issue. We have to fix the scoping issue. We definitely see, you know, on a couple of points, the standards are overly focused on risk. They need to be more focused on reward. You need to get rewarded for the performance you've already done, not the risk that you avoid, because that's going to drive behavior and decisions. Number two is they've been overly focused on renewable versus clean, which I think is what Brandon was pointing out. And so we've got to take advantage of the fact that the new US administration, for example, deliberately uses the term clean energy instead of renewable energy. That's not an accident that they're using it. We ought to leverage that because it does include our industry, but we've got to work against that challenge. There's an infatuation with new technology. You know, we keep saying that it's going to be battery storage instead of saying, well, why don't we actually build out what we already have that's already clean? Why don't we support that? You know, in the US, the example is let's keep the reactors running instead of shutting them down, because the solutions on the new tech side, well, then you're just going to have to triple, quadruple those investments to make up for what you've just shut down. And you're not getting further ahead, by the way, by doing that. And the fourth challenge is the lack of understanding that it's actually a transition that's required. It's an energy transition. It's a greening. It's not green. And there's just this new technology going to leapfrog. And we can just take entire populations that have no access to electricity and move them completely to brand new hydrogen technology. And they don't have to walk the transition in between. And of course, we know that's not going to work either. But that's the challenge at the global standard setting level. And Brandon started to get into some of the challenges we have in our industry. You know, we've forgotten that energy policy decisions are positioned on a triangle, and economics is one of the points, and emissions is another point, and security or reliability is the third point. And we're not valuing the emissions, and we're not valuing the security points as much as we're valuing economics, and that gives rise to what Brandon was talking about. Markets that price at marginal cost instead of average cost, that take the marginal cost of something that's been subsidized and fed in at the front of the line. And it's that classic snake eating its own tail, right? It works for a while, but when you start to grow the subsidized part of it, and the people who are paying the subsidy get a shrinking and shrinking share of it, eventually that snake is going to bite into something that's pretty useful, and it's not going to work anymore. We saw it in Ontario. And I think we've seen it in some of the states in the US. It's not a sustainable platform. So we have to deal with that. Remember that we've got to kind of manage all points on that triangle, and nuclear plays a great role in security, in emissions, and in economics. If we rebalance it, we have to come up with some accessible messages for those who are throwing the economics question or the waste question. We have to have responses. They've got to be accurate. They've got to be honest, they've got to be transparent, but they have to be accessible. They can't be massive scientific explanations. And then, as Brandon said, we got to tackle these market failures. And so, believe it or not, one of the things that makes me optimistic is the grid reliability, the grid failure that we've seen in some parts of the world, Texas, Japan. Those trigger the conversations about where the market failures are and how they need to be corrected. This opens yet another door for the industry to really kind of establish itself as not weather dependent energy, but day and night, every week, every month, every year. And there's some value to that. So we've got the challenges at the global standard setting level. You were talking about the EU taxonomy. And then we've got challenges as an industry dealing with some of the economic barriers that we face from a market failure point of view.
and certainly we're no strangers to market failures. Seeing problems that are not that far in the future and not being able to do anything about it because it's cheaper to ignore those problems right now. But I do feel like, and we have a few minutes left, I do feel like we're at a tipping point where essentially that wall of money that is chasing sustainable solutions in relation to a global question around energy, whether it be transportation, whether it be procurement for industry, whether it be home consumers. And I'm not convinced, as that mountain of money continues to increase, that there are sufficient outlets that can provide that solution if you don't include nuclear. So if it is a tipping point, if all we need is just a little nudge for nuclear basically to be incorporated in a very simple binary question, is it sustainable, is it not? Is it ESG compliant, is it not? What's the one thing, a question for each panelist, what's the one thing that we should focus on? And I'll take a show of hands in terms of who wants to go first. Okay, go for it, Brendan.
I don't know if this classes as one single thing, but you know, one thing that's come clearly through from comments of all of the panelists is that we are at the early stage of the classification of this entire discussion of ESG. And this is a very unique window in which our industry needs to be more proactive at making sure that classification is defined in such a way that includes us and includes all of the tremendous advantages that we can offer. So going back to Art's very first comment about, you know, we're at the beginning here, we need to be proactive to make sure that when these standards do get set in stone, we get appropriately recognised. So for me, that's the single most important thing that the industry needs to do, and it needs to do it well, and it needs to do it with a real sense of urgency, because that window will close in a couple of years.
Great, thank you. Art, you're obviously very passionate about this question.
You know, maybe just bringing it back to the fuel cycle a little bit. I'm not sure how many people in the audience actually slogged through that JRC report, but if you did, you'll notice that environmental is the key component that we're looking at when we think about EU taxonomy. And if you look at the rubric they're using to look at nuclear as a generation source, a lot of the environmental impacts of nuclear is actually in the fuel cycle. It's actually on the mining side. And so we would argue that you can't make a case for nuclear as a ESG investment unless you can make a case for the fuel cycle being ESG as well. And so I'd probably put it back to the people in this audience. You know, are you taking ESG considerations into account in your procurement? You know, do you have a defined rubric? Because what implementing an ESG rubric on procurement on the fuel cycle does is it actually kind of decommoditizes a lot of these markets, right? A pound of uranium produced by one entity in one part of the world is not equal to a pound in another part of the world. And so we can talk till we're blue in the face about whether nuclear has low carbon and whether it's got a low land footprint, all these things that we know it does. I think we win those arguments. But the question is, you know, Volkswagen is going to be judged on whether its battery materials are sourced in, you know, child labor, cobalt mines in the Congo. You know, you better believe that when nuclear tries to make the case that it's ESG compliant, they're going to look at where you're sourcing your materials. So I would say that, at least for the people on this call, maybe that's the big takeaway. You know, if you're not integrating this into your everyday life, I think in 3 to 5 years you'll be required to. So you might as well start now.
Great. Jarret, how do we do it?
Yeah, I think that's a great point that Art made. We're talking about the integration of it. So it's not like you have the operations of, here you're doing the exploration and creating the mine, or you're building the plant and operating the plant, and then the talking about it is somewhere else. You have a support staff that has, all of it is integrated. And so if what you're doing and your contribution to clean energy or to fighting climate change or to having a small environmental footprint is not embedded in your very operations, if that part of telling the story is not part of what you're doing, then you're doing it wrong, and we're never going to win. And the other part of it is that the industry is not going to find somebody else to tell the story for them. If we're not the ones doing it, we're going to be left out. And so we have to be able to step up and be the people that tell the stories ourselves, because we can't be waiting for somebody else to do it.
Grant, where do you come in on this question?
Yeah, Riaz, I'm broken record here. I'm going to go back to my very first observation, which is the two priorities we face. And I agree with Art that I'm really talking about the fuel cycle piece here. The two priorities are to get included, to make sure that we're pushing the standards such that they are clean, they are embracing the benefits of existing technology, that we are addressing the obstacles that we're seeing, the economic question, the waste question, that are in the way of being included. So number one is to be included. And the minute that occurs, we'll have about a 5-second breather. And then the pressure will be on to improve. So it's inclusion and improvement. And we have to show meaningful progress in advancing, well, E right now, so our own carbon footprints, but the S and the G, as though they start to, I think, retake their prominence in the broader conversation. So get included and then improve. And of course, the pressure is going to be on for those types of procurement decisions that Art was talking about to meaningfully reward performance in those areas versus give it lip service and then we just go back to, well, what's the cheapest price? Because then the industry will start to fall behind again, other industries, because it can't demonstrate performance across the entire spectrum. So let's get included, let's take a 5-second breather, and then let's drive improvement.
Excellent, thank you very much. I think these takeaways paint quite a positive picture for the industry. Summarizing, I definitely feel that the supply chain to getting nuclear fuel into the reactors and to produce electrons is a very ESG compliant fuel chain. And when you look at it in terms of the metrics compared to pretty much anything else, both from a waste disposal question, which hasn't really been addressed by so-called sustainable or renewable energy sources yet, to the mining landscape and how to economically generate the largest amount of power with the least disruption to the environment. Nuclear and uranium are really streets ahead of anything else that's out there. You know, I guess the point that I quite like to hear was about utilities and their roles as ambassadors for the industry, because we go back to one of the slides, and I'll just remind the audience, only 18% of the 425 utilities that were assessed actually met the clean and affordable energy sustainable goal of the United Nations. So all countries around the world have signed up to these goals. These goals are to be implemented by 2030. And as nuclear generation asset owners, being brave enough to basically say, yes, we are nuclear, and it's because we're nuclear that you as our customers are getting clean energy, is something that absolutely agree with the panelists who've made that point. Needs to come out a lot louder and a lot more defiantly. And with that, I think we're out of time. I really enjoyed this conversation. Thank you very much to all our panelists for their insights and their time, and obviously to our organizers for bringing this very important topic to this conference. So I'll hand back to you, Olga. Thank you.